Are realtors the biggest losers of the new tax plan? I reviewed the proposed tax law that will impact homeowners and buyers. Along the way, I discovered that residential realtors may be the biggest losers of this plan. First, let me explain how the law would impact people looking for a home or those who own a home. How the tax law may impact homeowners, buyers. Mortgage interest tax deduction. The proposed law would eliminate the mortgage interest deduction over $500,000. This means homebuyers could not deduct interest on the portions of their loans above $500K. So if you make a down payment of 20%, you could still buy a $625,000 home and would be able to deduct all of your mortgage interest. The impact of this change will be minimal in Columbus. The average sales price is currently less than $230,000. Out of 32,900 residential properties sold in Central Ohio in the past 12 months, only 682 were more expensive than $625,000. 2.1% of homebuyers would be affected by the new tax law. Property taxes. The proposed law was supposed to eliminate deductions of all state and local taxes. However, you would still be able to deduct up to $10,000 of the property taxes you pay. This will impact homeowners in suburbs with higher property taxes. For instance, a home valued around $350,000 costs the homeowner more than $10,000 a year in property taxes in Dublin, Ohio. Any amount larger than $10,000 would not be deductible. This would also impact homeowners who are subject to school income taxes. Many rural communities charge lower property taxes, which would be deductible. However, they charge school income taxes, which would not be deductible under the new plan. Capital gains exemption. The current tax law allows homeowners to exclude up to $250,000 in capital gains, $500,000 for married couples, from the sale of their primary residence. Under the new plan, homeowners must have owned and lived in the property for at least 5 of the last 8 years. Currently, the rule is 2 of the last 5. Taxpayers' use of the exclusion would also be limited to 1 sale every 5 years rather than 1 every 2. In addition, you would lose the gains exemption if your adjusted gross income exceeds $500,000 if married or $250,000 if single. The proposed tax law will have an impact on more expensive homes and luxury residencies. Home values may decrease a little bit, however, the changes in the capital gains exemption gives homeowners even less incentive to sell. And that's not going to help with our inventory crisis. How the tax law may impact realtors. Before the tax proposal was published, there was a lot of talk about capping tax rates for small business owners. The reasoning was that most small business owners, including realtors, use pass-through entities such as S corporations or sole proprietorships. This means the business income ends up on your personal tax return and is taxed at rates up to 39.5%. Limiting taxes on your hard-earned commission income to 25%, that's the number in the proposal, this would be wonderful for many real estate agents. Unfortunately, there's a caveat. Politicians are afraid that wealthy individuals will create shell businesses to avoid taxation. They want to exclude most personal service businesses from this tax benefit, including realtors, accountants, lawyers, and physicians. So who will decide? If you are a real business or just a rich individual trying to hide income from the IRS? Would a team qualify as a business and a solo agent not? Regardless of how they end up, this new proposed tax law will impact everyone from homeowners to realtors. For more expert tips and strategies, please visit columbusrealestatecoach.com and be sure to sign up for our weekly newsletter. Thank you for watching.